We search through the FAANG amalgam to find out if any of the 5 companies that make up the acronym still hold value. And joining me for this discussion is Caroline Cremen, who is the portfolio manager at Adviceworx, and Stephen Menchis, who is the head of research at Momentum Securities. Thank you so much for your time. Stephen, let's begin with the F in FAANG. That is Facebook, with its 2.7 million users, I understand, that use one of its services daily. That is either Facebook or Instagram or WhatsApp. Their numbers for you, as was reported in the second quarter, and your outlook for Facebook and whether it is something that you should still have in your portfolio.
Well, the advertising is revenue growth is a point to watch. Their costs, of course, are, they've got a lot of costs, a lot of fines to pay, and a lot of security problems to solve. I don't think the long-term picture is different, but price-wise and PE-wise, I don't think it's the pick of the bunch at the moment. Actually, it is. I mean, it's looking good value. I'm sorry. And I think it's definitely one to consider. I wouldn't be buying it right now, though. I'd wait a bit.
Too expensive for you? I mean, Caroline, weigh in here. And especially with them trying to build this digital coin, Libra, if they get central bankers and regulators on board, could Facebook be the thing that you should have in your portfolio?
I would be very cautious at this point in time, especially with market volatility. Also, I think, even though these fines, they're a little bit like parking tickets for these companies, but I think they're going to have to, and just remember this last fine was for something that happened in 2018, so they still haven't counted for all their recent sins. So I think they're going to have to relook at their business, really from the ground up. And there's going to be compliance costs, and there's going to be the inability to target users as revenue sources. To a certain extent in the future. So I think you've got the augmented reality, the virtual reality parts of with Oculus, which are going to grow into the future. It's a huge growth industry, but they still need those, they need the Instagram, they need WhatsApps, that they need Facebook, to keep going.
So if you guys are cautious on Facebook, if you won't be buying any more Facebook at this stage, but if you have Facebook, I imagine you'd advise that just hold it for now.
Yes, I'd certainly be buying it at a lower down, around about 150, I'd be piling in, yes.
All right then. Apple, iPhone sales look to be slowing, but it looks like their other services, their wearable devices, iPads, sort of coming to the rescue. The outlook for iPhone sales, is one that is continued to expected to slow. I mean, is this really a big deal for Apple?
Well, it depends if the other services can actually pick up, because remember, once you've got an iPhone, once you're in that Apple infrastructure, you kind of want to use, or you're kind of forced to use all of those other things.
Yeah, because they're so connected.
Correct, yeah. So I think people have harped on the services as being the saving grace for Apple. And I worry a little bit about that, because if you look recently, Netflix and Spotify have actually taken their payments for their apps off Apple apps. I think that cost Apple about $250 million. So it's got the potential to really start to knock their services revenue. So I think the only real nice upside that I see in Apple is Apple Pay. Apple Pay is actually the biggest payment system in the US. It's ahead of MasterPass from MasterCard and even from PayPal. So if the growth is going to come, and the steady growth I anticipate is going to come there.
Your take on Apple?
Well, I think it's it's not one of my 3. My 3 would be, as I said, Facebook lower down, and then Google and bring into, it's not in the acronym, but I think Microsoft's been reinvented. And that would be one of my selections. So
you say that Microsoft currently, for you, offering more value than an Apple? Right now, yes. I think it's interesting to look at the performance over a 1 and a 2 year basis, because there's, on a 1 year basis, all the FAANGs actually underperformed the S&P, excepting Facebook. Microsoft, incidentally, outperformed. And then on a 2 year basis, we had Facebook underperforming the S&P 500, and Microsoft, Amazon, and Netflix outperformed. So, I think they're all secular. I think there's long-term growth. It's not going to be affected by that much by a downturn in the US economy, but there's volatility in share price movements, and
they can chase each other around.
Caroline, you as upbeat on Microsoft?
Yes, I love the company. I think they've completely reinvented themselves. At one stage it looked like it was going the IBM route, and they're understated, I think, compared to these big ones that are in focus. And I think they're certainly taking a bite out of Amazon's cloud services that can only grow for them. The new monetization of the web services for their Office suite, everybody uses that, and that's just going to grow and grow and grow for them. So I think a fantastic business model, fantastic management as well.
And talking about Amazon, as you mentioned, the slowing down of its cloud business, I mean, how big of a concern is this for the company? And is this also a counter that or what's your view on Amazon?
So I'm a little bit cautious on it, especially going into this round of market volatility and a potential slowdown in the US economy. So cloud service is actually a very big part of it's the bulk of their operating income and a very big part of their revenue as well. And, it was low-hanging fruit, for competitors. So Microsoft has moved in there, Google has moved in there. So you are seeing slowing growth, and you are seeing declining margins. So, that's the engine that runs Amazon. Then you're seeing other areas of concern for me. The one thing about Amazon is they've actually got quite a large operating capex. They've got the distribution centers, they're leasing planes. Now, if the economy goes backwards, they've still got to support all of that. So I don't think even that retail side of things is looking too attractive for me in the current environment.
And there are big risks of the economy going backwards. Amazon?
No, I was just saying on the PE is also a bit of a problem. I mean, it's way ahead of the other, on 68 or something like that. I think that is really the problem. It's got consensus is looking for pretty healthy earnings growth. I mean, but that PE, I think, makes it not attractive at this stage.
It's amazing how you guys are agreeing on your views on these stocks. So you're as cautious on Amazon as Caroline?
Yes, I think in particular the valuation problem, valuation that is on now.
All right, so let's discuss Google, its parent, Alphabet. I've read that it was one of the better performers in the second quarter, growing ad revenue as well as more people took up the Google and the YouTube services. Your take on Google, a buy, a hold, or a sell at current valuations?
I would say it's a buy at these levels, yes.
Caroline?
Yeah, I completely agree. Again, I think in this last quarter, what really happened with the FAANGs going forwards or backwards really depended on whether they beat expectations or not. They were really punished if they missed expectations, and they were rewarded if they beat expectations. Almost had nothing to do with sales and revenue growth. It was just really a technical thing. But I think Google has really started to come back to the fore, kind of fell into the background a little bit, but there's some nice revenue generators there. They're introducing new products all the time. But I think for me, the jewel in the crown is YouTube. They started to monetize that. There's been a 75% growth in channels that have got 1 million plus users. So they're rolling out YouTube Premium, YouTube Music, for which you pay. But I think the cherry on top over the next 2 years is the US elections. Now it's there's an estimate. There's going to be about $10 billion spent on advertising for these two elections. About $2 billion of that is going to flow to the social media. So that's going to benefit YouTube. It's going to benefit Facebook.
Wow, that's a lot of money. But
of
course,
I mean, that's a kind of a one-off thing. But I mean, basically, it is secular. I mean, Amazon does obviously retail sales to some extent affected by the economy. But no, this is secular.
But what isn't a one-off thing or once-off thing at this stage is the situation with China and the US, with the president in the US imposing additional tariffs on China, which are expected to kick in on the 1st of September. I mean, how big of a risk is it for these companies, and who is likely to be more impacted by these additional tariffs? Stephen?
Well, I think Apple's in China, so you've got to watch that. I'm not so sure about the others, though.
Yeah. No, it is Apple, but also one of the other risks is India, which has been marked as the growth stock of these others. There's increasing regulation there. The Indian government is looking at some of these platforms in a lot more depth. So I think China's already pretty much in the price. I think people are factoring in trade wars. You'll see bumps like you've seen today. But I think India is going to become the next China focus of these companies.
Because, I mean, at the start of this segment, we were talking about the growth that these FAANG stocks have delivered, and they've been behind much of the gains that we have seen across Wall Street. And the conversation or the question that everyone is asking right now is that, is the party over, or do these stocks still have a lot more room to run? In your view, Stephen?
Well, I think we are looking for pretty steady earnings growth. As I said, Facebook on a 3-year basis, we're looking at something like compound 22% per annum, and with Alphabet something like 14, and with Microsoft something like 17. So I mean, those are quite decent, and that it's not as though on their PEs that they're particularly 21, 23, and 26 respectively. They're not wildly overvalued. It's fairly decent value. That's why I say Amazon on 68 makes one think twice.
Right. I think we forgot Netflix. Did we touch on Netflix?
No, we didn't.
We didn't touch on Netflix. Oh my goodness, how could we not? But of course, Netflix, I see that they had targeted additional or new subscriber growth of some 5 million, and they only got about half of that, which is like the worst performance in a very long time. Yeah. Your take on Netflix, and especially how it will weather the competition coming from Disney, which is expected to really give them a run for their money.
So Netflix is one of the FAANGs I've never bought for clients. I could
Interesting.
Just not.
Do you use it though? Do you use the service?
I do use it, but and I think there's very little in South Africa to choose between. There's Showmax and Netflix, but like you said, overseas there's a whole variety of different companies, and I could never understand their business model because there were low barriers to entry for companies who actually had content. And what I don't understand about Netflix, when you look at their financials, and content is actually listed as an asset. But you don't know how much of that content is original content and how much of it is essentially licensed. And all the companies that have licensed that content to them are now pulling it back. Disney, for example, Hulu. So it is going to impact them going forward. I mean, they're losing shows like Friends and The Office, and these are the most watched shows on Netflix in the US. So I think, the chickens are coming home to roost. They've got a very aggressive balance sheet. Their debt is growing way in excess of their income, and if you start to see the subscribers not make up for that, this is potentially an accident waiting to happen.
Sure. Management's a bit more confident about the third quarter, though. I see that they expect some new releases, new hits like Stranger Things or The Crown. I'm not too sure of them to bode well for their numbers, but are you as pessimistic on Netflix as Caroline, Stephen?
Well, it's not a case of so much a case of being pessimistic. I think the consensus is looking for 33% compound annual growth, and once again it's a valuation on the 66 PE. I do agree there's a lot going on in the industry. In fact, it might get over competed, and then there might be consolidation again, and it might come out of that with the upper hand. But yes, I think would not be a choice now.
Interesting perspectives. Thanks so much for your time. We will leave it there. That, of course, was Stephen Menges, who is the Head of Research at Momentum Securities.